So it seems like everything we've been waiting for several months is finally here in the cryptocurrency markets. First, we have Ethereum merge that is coming out in the next couple of days, and then we have the CPI data for August, which doesn't seem like it's that important, but this could be one of the catalysts that, moves Bitcoin down even further or kind of changes the game and sets the floor for the future. And on top of the two biggest cryptocurrencies having some of the biggest news come out this month or almost this entire year, we also have some pretty big updates in the cryptocurrency markets for other things and developments going on. So the first thing I want to go over is the importance of this CPI data coming out in August. Now, over the past couple of days, Bitcoin has been pumping, and a lot of that is due to people thinking that, inflation is going to start coming down. Now, that's important to understand because even with inflation coming down, or let's say we get good results in CPI data, no matter what happens, if you look down here, the Federal Reserve and Powell are still going to raise interest rates by 75 basis points, which basically means that no matter what this data tells us, he's going to continue to hit the markets hard with interest rates, which are also going to slow growth in the economy. Now, but again, a lot of investors don't really care about that. They want good data. They want inflation to start coming down, and they want good signs of that. But again, in the long term, I think it's going to be good for us to start seeing that decline. But just because we have good numbers for the month of August could be very deceiving, because in September we could get even worse numbers. So the Federal Reserve is not going to take this lightly. Even if we get good numbers, they're going to continue to hit the markets hard, which I think no matter what happens, honestly, good or bad numbers, we're still going to see Bitcoin fall in the near-term future. But onto some more lighthearted news. Starbucks actually chose Polygon to launch its new NFT community in its rewards program. Now, this is important because, one, I think in the past, Starbucks has done very well with becoming kind of like a coffee bank, so to say. They were really the first to make, rewards points big or kind of popular, so to say. So it'll be interesting to see how they platform NFTs to their users. Maybe they're not going to promote it as much as like a cryptocurrency type thing, but more of like a rewards program type thing, because in the past they've been able to do that successfully. And now it's interesting to see how they're going to pivot and basically include cryptocurrencies and NFTs in their new structure. And one really big thing that came out recently that hasn't been authorized yet or confirmed, but apparently Fidelity is going to shift its retail customers to crypto. And this is going to be extremely huge because, one, you have to remember that when we're talking about Fidelity, they own over $4.2 trillion in asset management. And on top of that, they have over 34 million customers or investors in their base. So for them to start shifting and pushing content such as crypto, probably adding it into their main investing platform and their tools and, having their investors speak on it, it's going to bring a larger audience into this, as we've seen, with a lot of other things. But when you get companies like this that are so trusted, that have been here for a long time, that are, mom and pop names, this is a really big deal, especially with the amount of money that they're actually managing and pushing it to the public, not just investing in it for themselves. Now, one really interesting chart that I want to show you guys is the price drawdown from its all-time highs. If we look at the past two bear markets, you can see that first in the beginning of 2015, Bitcoin and basically the whole market dropped around 85%. Now, when we go and fast forward 4 years later to the next bear market in 2019, or the beginning of it, we can see that it also drops around 83 to 84%. So over the past couple bear markets that have been kind of, legitimate, so to say, we have seen an 80% plus drop, maybe to even 85% plus drop. Obviously, over here is when we saw COVID hit, but this really wasn't our bear market because immediately after, we saw that massive surge to the upside. So this really tells us that if we look at the past two bear markets, and right now we're only 72% from the all-time high, that means we still have around 10% that we can drop in Bitcoin and the total cryptocurrency market. Now, to kind of second this theory, there's another really good article by CryptoQuant that was just released saying that Bitcoin can actually fall a little bit more to maybe even $14,000. If we look at this chart that they have posted up here, one thing that they really touch on and what they want to look at is the delta price. Now, delta price measures the difference between the realized, the average price at which all Bitcoin in existence has moved, and the historical moving average. Now, this basically levels out, basically the true Bitcoin value, so to say, or the delta price of it. And when we actually look at the chart, what we're looking at is that the delta price is this purple line. And we've seen, again, in the past two bear markets that when we dropped 83 to 85%, both times have hit that delta price, which really tells us that is the bottom, the floor of where Bitcoin and the cryptocurrency market sees itself at. Now, what we've seen is that we got very close over here, but there really wasn't a solid touch like there were in the past 2 bear markets. And so what we are looking at is that maybe even if we fall to 14,500, which would be the delta price, maybe that is the bottom for Bitcoin. And looking at, how we still have around 10% more to go to drop if we want to equal the last 2 bear markets, it could be interesting to see how this happens. But let's shift over to the charts. Let's talk a little bit about what's going on here, maybe the short term in terms of, what the DXY could be doing. And maybe that can help us kind of get a better visualization of what Bitcoin could be doing. So first, we're going to be looking at the DXY. Now on the daily, obviously you could see that the DXY has risen quite a bit, and it's been in this very strong uptrend. Now what we could see is that if we get really good CPI data, meaning that inflation is falling, then that means the DXY, or basically the dollar index, would also fall, because the currency or the dollar is going to be stronger when there's higher inflation, because interest rates are going to rise. Now, let's say that it comes out bad and inflation is higher. That means the Federal Reserve is going to take a bigger action in the dollar index, and it's going to raise interest rates even more than they wanted to, or for a longer period of time, meaning that the dollar will strengthen. Now remember, the dollar index basically is doing the opposite of what Bitcoin does. Basically, from the beginning of the year, you've only seen the dollar index rise because inflation has risen, interest rates are hiking up, and if we go over to Bitcoin, you are obviously seeing the opposite, where you've only seen Bitcoin fall. Now, which is interesting because a lot of people say that Bitcoin is an inflation hedge, which, yes, if you look at what it is, with its finite supply and basically being able to use it as digital gold, maybe. But as of right now, many people are looking at it as a risk asset. And that's just because a lot of people are very uncertain of what's going on right now. But when we're looking at the short term of it, putting all of the fundamentals aside, what we could probably see is that, again, doing the complete opposite. If we have really good numbers come out for the CPI, then that is really good for Bitcoin, which means we could probably see it pop up to this $25,000 resistance zone. Now, this is important because once we reach this zone, the next support or resistance that we have is around $28,000 to $30,000. And I'm not really sure if we have enough liquidity or if enough volume to reach that zone. So I think once we reach $25,000, it also being a psychological level, it'll be interesting to see how Bitcoin plays out. Maybe it pops up a little bit and then kind of starts to consolidate, but it is looking like we could get a push to 25K with good results. Now, if it's bad, I think what we could see is a sell-off because people are starting to see that, hey, inflation really isn't getting better. And when we really look at the data, we're going to continue to see interest rate hikes for longer than we actually want. And then we get sell off back into this accumulation zone. And honestly, for me, even with good CPI data, I still think in the medium term, maybe over the past couple months, we're still going to see Bitcoin fall at least to this 1750 support, and again possibly to this 1450 support where the delta price sits at. Because if we take a look at Bitcoin and we drop 10% more from where we are right now, where does that lead us, right? Oh, sorry, I did that wrong. So if we go all the way from the top, currently what it said is that we've dropped over 72 to 75%, which seems to be the case right around here. If we drop 10% more to around 85, let's say, then that's going to lead us actually to around $11,000. So it'll be interesting to see how much more we drop. But again, one important thing is that when we look at the kind of future of Bitcoin, if we take a look at 2015 versus now, we've seen diminished gains in the bull market and then diminished losses in the bear market. So maybe we don't have to drop 85%, maybe it could be 80, maybe it could be a floor at the 75%. It's really interesting to think about, but definitely one thing in the short term is that if we have good CPI data, we come up to this resistance. Bad, I think we're going to drop. But I think no matter what really comes out is that since the interest rates are still being hiked up by the Federal Reserve, we're still going to see a push down in a lot of these risk assets. Now, that's basically everything I had for this video. I know it was a little drawn out, it was a little dragged out. I know it probably got boring at some points, but if you made it this far, I really do want to appreciate you. I do want to thank you guys for sticking to this video. Hopefully tomorrow and the next couple of weeks, I can bring some really good info, really good data, and really good videos for you guys. And make sure to comment and subscribe down below if you want to stay up to date on these daily videos. But until the next time, I'll see you guys then. Peace.